Hey there, it's Walter Peters here from FXJ, and I want to talk about naked Forex trading versus price action trading. What's the difference? This is a picture of me. I know sometimes when you watch videos like this about trading, you don't know who the guy is or the girl or whomever is doing the video. You don't know what they look like or whatever. And this is basically a picture so you see what I look like, because I know trading can be a weird thing when you're listening to all of these videos and watching these videos and you don't even really know who the person is. And I think this is some bench in Spain is where that was taken. Now, this is the book I wrote. It's about naked Forex trading. I don't really care if you buy the book or not. It doesn't matter to me, but it looks like at least 50 people did buy the book, and the book is about trading without indicators. So that's what I'm going to talk today about, is trading without indicators. Here's the website. If you go to the website, the videos change here on the home page. You can see there's a book, there's many, over 100 videos on YouTube, a couple of articles from the Wall Street Journal about me, FX Street, I do stuff there, Forex Peace Army, they've rated our stuff, Twitter, we like to offer free webinars and paid webinars, people that want to come to those, often through Twitter, and special stuff that only is available on Facebook. Let me show you my chart. What I have here, my friends, is what I would call the euro. You might call it the euro too. And what it is a 4-hour current chart. We're in the Asian session now, so it's not moving that much, but later on today I would expect that during the Europe or New York session it'll start hopping around and start really flaring up and doing its thing. Now what I want to talk about is a misconception about naked Forex trading. Some people say that naked Forex trading is simply price action trading, and I would say not really. If you get a book or you read something about what's often referred to as candlestick trading or Japanese candlestick trading, you will learn about certain price formations. They are different to the ones that I use, and this is the greatest example I can think of is actually staring me right in the face, which is great. This right here is a bearish engulfing candle, and under most circumstances what would happen is that the trader would take a sell trade here. Now if the trader being you or me or whoever is using this engulfing pattern, if they did this, they probably would have a stop loss above this red candle here, or possibly the stop loss would be above this green candle here. Either way, you can see that this candle stops it out for sure. Maybe this one, maybe that one, but I think this candle would definitely make this a losing trade. You can see the market actually fell a little bit lower than this bearish engulfing candle and then went straight back up and tagged the stop. This setup, for me, as a naked trader, would not be a trade at all. And this is one of the advantages that I believe naked trading holds over simple price action trading. The rules are designed to actually increase the win rate. And although there are still losing trades, what I found is that trading with specific rules, such as the rules for the big shadow trade, rather than this bearish engulfing, because the bearish engulfing pattern is a great pattern, but it has some weaknesses. And by using the big shadow trade instead of the bearish engulfing, what I found is that my win rate goes up. Let me show you on the daily. I think we have more than a few examples. Probably the easiest one to look at is this one. And this is a bearish big shadow trade. What is a bearish big shadow? Well, you can see here the high on this candle is 34.14. I'm just looking down here where it says high. The high on this first candle is 34.14. The high on the next candle is 34.15, so it takes it out by a pip. It has a higher high. That's the first thing that we want to see if we have a bearish big shadow. The rules, of course, are reversed if we have a bullish big shadow. But for a bearish big shadow, the second candle has a higher high and a lower low. Now, actually, this rule will also work for bullish big shadows. It will have a higher high and a lower low on the bullish big shadow as well. So, does this have a higher high? Yep, by 1 pip. Does it have a lower low? Clearly, it has a much lower low. And we're looking at the wicks here too when we're using a bearish big shadow trade. Whereas the wicks are basically ignored when you're looking at an engulfing candle. If you're using Japanese candlesticking, you will completely ignore the wicks. Okay, now the next thing is that there is what we call room to the left. What the heck is room to the left? This is probably the trickiest concept to get across when you move to naked trading, but it is also my favorite one because it helps out so much. Now, it's a little bit confusing, but let me show you visually what it means to have room to the left. And I'm going to put my rules over here so they're out of the way. My first two rules are out of the way. Okay. Visually, room to the left looks something like this. I'm going to insert a box and I'm going to pull it across here all the way until it hits a candle, and it hits a candle right here. All right? This is room to the left. Let me zoom. I just messed it up. Let me zoom in so you can see room to the left. This is room to the left. This is the wick of, well, essentially both candles. The big shadow candle, which is this one, and the prior candle, which is this one. Now, what does this shaded area represent? It represents the piece of this two candle formation, because it is a two candle simple naked Forex price action formation. It's very simple. Two candles. But this is the amount of that two candle formation that has printed on the chart in a what I call a unique space. What is unique space? It's a place on the chart where price has gone to, and it hasn't been there for a long time. In fact, we'd have to go back. Remember, this is the daily chart. We'd have to go back all the way to this candle to see 84 days prior. So here you have a bearish big shadow in June, and the last time price was there was all the way back in, looks like it's February. So that's a long time, right? We're looking like 4 months, more than since the market did that. So it's a long time for the market to get back up to this level. Why is unique space important, and why should we have room to the left on our price action reversal setups? This is clearly a reversal trade. The reason why is because we don't know where the market's going to reverse at, but we do know when the market reverses, goes to a spot, and then goes away from there for a long time, they tend to look like this. They tend to look like those spots on the chart where there's a lot of room to the left. So we want to capture these swing points if we're reversal traders. And when we do that, the easiest way to do that is to see how much of our price action formation, how much of this bearish big shadow two candle naked Forex setup has actually printed on a unique space. And you can see it's this much. The more, the better, of course. But in this case, this is plenty, and it gives us a pretty good clue that the market is probably going to reverse here. And so room to the left is the second rule. Now let's talk about the third rule. And this is a very important one, and it's one that really helps with the win rate I found in my trading personally, which is I wait for the next candle to trade lower or higher in the case of a buy trade. So the next candle has to take out the low of this bearish big shadow candle. So let's go ahead, and I'm going to get rid of this box here so it's not distracting. So let's take a look at what happened here. It looks like the next candle did in fact trade lower. This candle right here. So what happens is I'll generally put the sell order around 5 pips below, 5 pips below the low of the candle. So somewhere going to be around here. Okay? And the very next candle should go lower and trigger the trade. You can see it did. The very next candle triggered the trade. It took out the low of the bearish big shadow candle, and at the end of the day the trade was in approximately 42 pips of profit, right? So that's the third rule, waiting for the next candle to trade lower, obviously higher if it's a bullish setup, a buy setup. Okay, now here's another rule which gets a little bit tricky, but it's in my book. And basically when we see a bearish big shadow, unlike a simple engulfing pattern, we want to see a candle that's the largest bodied candle, the largest range from high to low, not the body of the candle, but the whole candle. We want to see the largest range we've seen in a long time. How many days has it been since a candle this large printed? Well, first of all, let's look at how many pips is this candle. It looks like it's about 156 pips. So the question is this candle 156 pips? Clearly no, because this candle takes it out. That one isn't. That one isn't. That one isn't either, I don't think. Sometimes with the wicks it's a little misleading. They look smaller than they are. But yeah, 111. This candle right here is 93. And this candle right here is about 90. This one clearly isn't. It isn't until this candle here. Ideally, I'd like to see that my big shadow candle, this one's 226, so clearly it is bigger than our big shadow. But I like to see the big shadow candle be the largest candle of the last 6 to 10 candles. Now, if I use 10, I'm being really conservative. If I use 6, I'm not being as conservative. But the point is, remember when we looked at that 4-hour chart trade? Look how long, if we go back, how far back do we have to go to see a candle that's bigger than the engulfing candle right here? Remember, the engulfing candle is the red one, it's not the green one. So if it's this red candle here, how far back do you have to go to find a bigger candle? One candle. The very next candle's bigger. So what does that tell me? That candle's bigger, that candle's bigger, even this candle's bigger. What that tells me is that this isn't really an exhaustion. An exhaustion in a market where the market decides, oh, I've gone too far, I'm exhausted, that usually will happen when the candle is large. It usually has a long wick or a big body or whatever. It doesn't matter. The point is the market's decided that it's over. So these are some things that if I were you and I wanted to get really good at trading without indicators, which a lot of traders are doing now. I mean, it's something that, trading with indicators gets to be a bit of a drag because your indicators are late. They get you in bad trades. You miss out on the very best turning points. Well, when we trade naked, a lot of that stuff kind of goes away. Remember, higher high, lower low on the bearish big shadow. We've got room to the left, especially when it's a reversal setup. We want to see the next candle trade lower, the very next candle. If the very next candle doesn't start trading lower or higher in the case of a buy trade, then it's probably not a good trade to be in because there isn't momentum going in your favor. And then the final thing, of course, is that we want to see the largest candle, number 4, largest candle range of the last 6 to 10 candles. And it really depends on how, if you want to be really conservative, you say 6 bigger than the last 6 or 7 candles. And if you want to be if you want to be getting more trades, you can say in the last 6. But if you want to get in fewer, probably the best trades, you would say in the last 10. It really depends on how many trades you want to take. Now let's see if these rules work. Okay, what I'm going to do is just pull up Forex tester here and see if you can follow along. This is the euro yen now, 4-hour chart. And so what I want to do is I want to start trading this this market, and what I want to do is simply wait for the very next bearish big shadow or bullish big shadow or whatever and see what happens. Okay, I'm just going to hit the space bar because it's faster for me. Okay, first of all, let me show you something. This candle right here is an engulfing candle. This candle engulfs this candle right here. The market does go up and then it falls like a brick. So here is another case of an engulfing candle that, guess what, didn't really work out so well. Now let's keep going. Now we've got a gap down here. What I'm looking for, again, is a bullish big shadow or a bearish big shadow, a candle that's the largest candle that we've seen in some time. That's really critical. Here, this is an engulfing candle. It's also a bearish big shadow, except for, guess what? We only have to go back 1, 2, 3 candles and we see a larger candle. So for me, this would not be worth it to take this trade because this candle's bigger. You can see it would have been a loser. So that rule kept me out of a bad trade, right? Also, this one had very little room to the left. Just a little tip right here had room to the left. This candle here, this red one, is an engulfing candle, but again, it's a loser because it doesn't fit all of the criteria of the bearish big shadow. Uh, does it have a higher high? No, equal highs, so it doesn't have a higher high, so it doesn't fit. Also, it's not the largest candle we've seen in the last 6 candles. So now this one might have a lower low. No, it doesn't. It has a higher low, so that one doesn't qualify either. What I want to see is just a brilliant one so that we can see something that looks really good and see how it works. This is a bearish big shadow, but look at all this traffic. See how this next candle's in the way? There's no room to the left. That's not the type of trade I want to take. And again, I miss out on a losing trade there by using that rule. Somewhere I know we will get a bearish big shadow. One of the things about using the rules is it allows us to be very patient, waiting for only the best trades. This was a bearish big shadow here, but again, it had no space, no room to the left, really. The market did fall. I know we'll get one eventually. Somewhere down here we will. Nope, not quite. Not quite. This is a bearish big shadow, but again, it's not larger than this candle, so it doesn't qualify. Okay. Okay, now we're talking. This is the largest candle. I'm laughing because it's such an obvious one, but this is the largest candle we've seen in a long time, larger than that one, that one, that one, that one, that one. I mean, I don't know how far we'd have to go back. Probably have to go all the way back to maybe this candle, maybe this candle. We'd have to go back a long ways. Remember, we're on the 4-hour chart here. This is not the daily chart. It's even bigger than this one, clearly. So how would I trade this one? Now, does it have room to the left? Well, yeah, it does, because I could take the tippy-tip top of this candle and pull it across and see that we don't have any price action here. So that's a great sign. So it has room to the left. Does it have a higher high and a lower low than the previous candle? Yes, I'd say so. Is the next candle going to trade lower than the low? I'm not sure that it will, but if it will, that's where I want to have my order right there. A few pips below the low. My stop loss is going to go up here above the high. And I'm going to take profit all the way down here. And then what I'll do is I'll place another one too, another trade. And I hope it does trigger so that we have something here for you to see. The take profit will be down on this area for the next one, though. Okay, so you got 2 orders here. We'll see if the market does in fact trigger it. It doesn't. Okay, so we don't take the trade. We missed out on this trade, right? Which is a bummer. A lot of times when you get these massive, huge candles, it will do a little bit of a retracement before it goes. But you can see here that this one was a let me backspace over it. It was a no-go because this candle didn't trade lower. It didn't trade lower. The next candle did, but we missed out on this one. So let's keep going here. Let's see if we get anything really nice. Any really good, looks like it would have hit our target right here, the target that we had. So we get any really nice looking setups. Again, I want space, I want room to the left. I need a lot of things here for me to get a nice setup. Oh, wow, that is not a bullish big shadow there. Let's go to another chart actually. Let's take a look at the Aussie and see if the Aussie gives us anything. This one was actually a bullish big shadow, but again, it was sort of with the trend. It wasn't one of those reversal ones that I like to take. So, didn't qualify. There's a bearish engulfing, but again, it went down a little bit and then rocketed back up. was not a bearish big shadow. That was not a bearish big shadow either. It would have been nice if it had a slightly higher wick, because that would have been a nice trade. But again, it didn't trigger, it didn't go below the low there, so it didn't trigger it. Market's getting very choppy here. Ah, here we go. This one's interesting. This is a bullish big shadow here. It engulfs the prior candle. It's got a higher high and lower low. Is it the largest candle that we've seen in the last 6 candles? Let's see. I think it is. It's got about 100. Oh, sorry. It's got about 71 pips. Yep, 71 pips. And this candle here is obviously smaller. This candle's smaller. So yeah, I think it's going to qualify. Yep. It's larger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 than the last 10 candles. So it certainly does qualify. Does it have room to the left? It does have a little bit of room to the left. This one's a little bit tricky because what happens is it's only got this. It does have, look, this much room to the left. And it hits these candles over here. So it doesn't have a whole lot of room to the left. But the point is it's not in all this price action here. It's not mired in all this. So this is what I would call a absolutely perfect, oops, I don't want a market order. I want a buy stop above the high here, right there. And I want my stop loss down below the low. And I want to take profit up here at these recent highs. Okay? Now I'm going to duplicate that order, and I'm going to leave the take profit open. Same stop loss, same entry. I'm just going to leave the take profit open. Ah, we did get triggered. Brilliant. And we hit target 1. Now what I'm going to do is I'm going to move my stop loss to break even because it hit target 1. And I'm just going to back up this chart and see if we have any place that would make sense for targets here. No, I don't. Okay. So what I'm going to simply do is wait for the first bearish sign. When the market gives a big bearish candle, I'll get out of this trade, in essence. Now that was pretty bearish. Let's see if the market trades lower than this candle. Yeah, it did. So, okay, that's a nice bearish candle. I'm going to get out of this one with 216 pips. So there you go. That's the rules for our big shadow trade, which of course is very different to what you would learn if you learned Japanese candlesticking and you were interested in engulfing candles. They are a special case of engulfing candles, and I would encourage you to test them. I think you'll find that they work better and that you might find that naked Forex trading is for you. Until the next video, I wish you happy trading.